Welcome to The Explainer. Today, we're diving into how the crypto market is growing up right before our eyes. You can forget the hype cycles of the past because the real story now, the one that actually matters, is how regulation and new financial plumbing are building a much stronger foundation for what comes next. And really, this quote right here, it frames everything we're going to talk about today. It's a fundamental shift in focus, away from just pure price speculation and hype, and toward the deep structural changes that are literally defining the next chapter for digital assets. So, here's our game plan. We'll look at the market's new foundation, walk through how regulation is going mainstream, follow the money, talk about some growing pains, and then wrap it all up with a midterm outlook. All right, first up, let's just set the stage. The market right now is in this really fascinating spot. It's a tug of war between people taking profits off the table after these huge runs. And on the other side, some of the most important long-term structural upgrades we have ever seen in this space. Okay, so to ground our discussion, here's a quick look at where things stand on August 16th, 2025. But, think of these prices as just the surface. What we're really interested in today are the powerful currents moving underneath. Now for the main event, really. How the rules of the game are changing. This might be the most critical development happening in crypto, and it kicks off with a really subtle but powerful move from the US Federal Reserve. So what just happened? Well, back in 2023, the Fed created this special program to keep a close eye on crypto and fintech. They've just announced they're ending it. From now on, crypto-related activities will just be supervised as part of their normal, everyday banking oversight. And the implication here is huge. This is not deregulation, it's normalization. Regulators are basically saying, okay, crypto isn't this weird, novel thing anymore that needs its own special sandbox. It's becoming just another part of the financial system. This is basically a green light for traditional banks. It takes away so many of the roadblocks, both psychologically and procedurally. This makes it way easier for them to start offering things like custody, payment integrations, and even credit. This could be what truly opens the floodgates for corporate cash. And this whole theme of improving the financial plumbing continues with the SEC. They approved something called in-kind creations for crypto ETFs. Now that sounds super technical, right? But all it really means is big investors can now swap their actual crypto directly for ETF shares, and vice versa. It makes the whole thing cheaper, more efficient, and creates a much more stable and attractive product for serious, large-scale investment. So, with the rules getting clearer and the infrastructure getting better, the big question is, where's the money actually going? Let's follow the capital and see how it's reacting to this new, more stable environment. And the first signal is a big one: $3 billion. That is the amount of new money that has recently poured into the spot Ethereum ETFs. This is not a trickle, it's a significant wave of capital, and it shows a very clear shift in investor focus. You can see it right here on this chart. For the past couple of weeks, Ethereum has been the main character in the ETF story. Capital isn't just flowing into crypto in general, it's specifically favoring Ether, which has been consistently outpacing Bitcoin in both daily and weekly inflows. But the institutional embrace isn't just about money flowing into crypto products. We're also seeing crypto-native firms move toward traditional public markets, which further bridges these two worlds. So Gemini has officially filed to go public. Now, their financials show it's a volatile business for sure, but that's not the real headline. The act of filing for an IPO itself is the key takeaway. It forces transparency, it invites regulatory scrutiny, and it weaves the crypto ecosystem even deeper into the fabric of traditional finance. Of course, all this maturing doesn't mean prices just go straight up. I mean, this is still crypto, after all. So let's take a look at the push and pull forces that are shaping the market at this very moment. The primary dynamic we're seeing is a battle. On one side, you have traders taking profits as Bitcoin gets near that $120,000 to $125,000 level, but on the other side, you have this incredibly strong underlying support from these new, persistent ETF flows that are just buying up the dips. And to really understand how much this market has grown up, we have to talk about its depth. Basically, market depth is just its ability to handle huge buy or sell orders without the price totally collapsing. And just recently, that depth was put to a major test. So get this, over $70 million in Ethers sold from some notorious old hacker accounts suddenly hit the market. A few years ago, a sale like that would have triggered a panic-driven crash. This time, the market just absorbed it. That's proof that this steady daily demand from ETFs is creating a powerful, stabilizing floor of support that just wasn't there before. Okay, so what does this all mean for the next few months? Let's bring all these pieces together and try to form a clear, forward-looking view. Here's a quick summary of what the analysts are thinking. Short term, it's a bit of a mixed bag. Bitcoin might be range-bound for a little while as it digests these huge gains. But the midterm outlook is broadly bullish, and it is especially strong for Ethereum thanks to all these structural tailwinds we've been talking about. And maybe the final piece of the puzzle comes from outside crypto. It's not just the crypto-native firms that are maturing. You have financial giants like Citigroup now publicly saying that clearer policy from Washington is their green light to enter the space. This is how the real on-ramps for serious corporate cash actually get built. When you put it all together, the conclusion is pretty clear. The foundation of the crypto market is stronger than it has ever been. The story isn't just about speculation anymore. It's about normalized regulation, better financial products, and the undeniable entry of institutional capital. And we'll leave you with that question to think about. While that short-term volatility will always be part of the game, the nature of the game itself is changing, shifting from a chaotic sprint to a structured marathon. Thanks for joining us.